Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors, and welcome to this Thursday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. We got a pretty jam-packed show for you folks today. A pair of guests on, one at 8:15. That'll be Ron Bienvenu, of the managing member of Spear Point Capital Management. They are an activist investor firm. And then at 8:35, we're chatting with Daniel Klein. He's a writer at The Motley Fool. In between those guests, we're going to be talking about earnings today. We got Cisco, Walmart, Best Buy, First Solar had some guidance and some not good one at that. We're also going to touch on this UWTI, DWTI delisting. I'm sure Dennis has some thoughts on that. Joel, how are you doing today?
Doing okay on this foggy Thursday here in the Motor City. A little under a 7-point range. S&Ps are winding up here, folks. Tight range yesterday, intraday. I'll just give you the levels. 78 and a quarter. That's your pre-market high. 71.75 the low. So tight range trading here right in the middle. Crude continues to move higher here. A little OPEC talk got things going. Got a nice, 2, 3, 4 day rally going here. Current high is 46.38. In fact, we might have rolled contracts here, so I have to do some work on the crude oil. And gold, who was talking about gold in here? Glenn Mee was talking about gold. Got a really nice formation. Dennis would say it's looking itchy here. Basis the daily chart. You got 4 highs within a $2 or $3, $4 area. We'll have to keep an eye on that. 12.33.10. Certainly gold winding up here. Maybe time for a little bit of a strangle or straddle here because it's going to break out of this range. Dennis, I know you're very disappointed that they're going to delist the DWTI and the UWTI. I know that's your bread and butter, and that's how you make
I've hated these products forever, and I don't understand why they were allowed to be created in the first place. The triple longs and triple shorts, and this is my opinion. I guess if you like trading these things, do what you want to do. But this is, my thought process on the triple longs and triple shorts. First, the way a lot of these are created, there's erosion, natural erosion in these products, especially when you talk these ones that track the oil 3 times. So basically what they're always doing is they're always buying the next month out and selling the front month. And then, obviously the next month out eventually becomes the front month, and they have to turn around and roll it again, because otherwise they're going to take delivery on all this oil that they don't want to take. So in order to not take delivery, they're always, buying the next month out and selling the front month. Well, what that is, it's in contango all the time. So it's always naturally eroding to the tune, it's in the last few years, it's been 12 to 15% a year, sometimes even more than that. The contango is so bad. So basically, if oil goes up, just saying, and that's just even in the USO. If oil goes up, then obviously these products have to, if oil goes up 15%, this talking the USO, if oil goes up 15%, that's only going to break you even on that product because of the contango. When you got these triple longs, though, it's even worse. So, that's, why the way they're created, I think, is very poorly structured. I don't know how else they can create them, though. It's tricky because you can't just, there's cost of carry and holding oil. I get it. There's oil, there's big barrels of oil there. You're buying for $45, so it's a big cost of carry involved. So I'm not sure how, the alternative is to create the USO. So I'm not going to complain about the USO here right now. But when you're talking the UWTI and DWTI, not only, is the contango really bad on them, the other problem isn't this just a way around margin rules? I mean, we created margin rules, and we used to have it at 2-to-1, and now it's 4-to-1. And in some places you can get 6-to-1. So I don't even know in the retail brokers what it is anymore. But when you have, let's just say 4-to-1 margin intraday, now all of a sudden you allow the investor to buy a triple long or triple short. Well, if they use up all 4-to-1 margin and they do a triple long, they're really 12-to-1. Isn't this just a way to get around the margin rules, these triple long and triple short? I mean, really, if you created the margin, you're really worried about investors, getting over levered in something, then why give them allow them to buy something that's a triple long, and then you couple that with obviously 4 times margin, you could be 12 times margin. So, that's my complaint is, if you got the rules in there, I don't know if they should be there or not, but if they're there, this just seems a way around the rules. So, poorly structured vehicle, triple longs, I'm just not a fan of anything that is triple long or triple short. I think, if you want to get triple, to the exposure of something, then buy 3 times as much of it. And if you don't have the money to do it, maybe you shouldn't be putting that much money into something. So, I'm all about diversification anyway. So, I just don't like these products at all, and I'm very happy that both of them are being delisted in December.
Couple comments out of the chat from Angie Baby. You see people losing their shirts on these products, which is true. And Don33 recognizes that they're supposed to be used for day trades.
Yes.
Not going to throw a conspiracy theory out here or anything, but something must have happened. They must have lost their shirt on some exposure, or they're getting some complaints, because these things were volume kings. They were making big money on it, and now they pull the rug out. So we'll find out the real story someday. That's just my take on it.
The biggest thing, and Don33 making a great point, because he understands, aren't these just designed for a day trade? And we've said that on the show multiple times. People don't understand these vehicles, though. They don't understand how they are created here, and that is obviously why that's the biggest complaint here at all. People think, and they honestly think, if you buy this triple long, UWTI, and if oil goes up 2%, or if your oil goes up 10% this year, and I put UWTI, they think they're going to be up 30%. They really do think that. Everyone thinks that. I bet you 90% of investors think that out there. And they're all wrong, because it only tracks the daily. It says right in it, it tracks daily, but investors don't understand it. So right now, USO's up 1.76%. UWTI, if you take a look at that one, it's trading up 4.93%, doing what it is designed to do. Track it for the day. But that is it. These are day trading vehicles. Don33, you're absolutely correct. So if you're using them as day trading vehicles, continue. But once you start holding these things overnight, that's when it gets sloppy, that's when it gets messy, and that's what investors don't understand.
All right, earnings here. Where would you like to start? With the Cisco Kid?
Yeah, go to the Cisco Kid. Here's CSCO down $1.50 here in the pre-market. Spencer's got the numbers there from last night. How'd Cisco do?
Q1 adjusted EPS 61 cents. That's a beat by 2 cents. Q1 revenue 12.4 billion versus 12.33 billion dollar estimate. They see Q2 adjusted EPS at 55 to 57 cents. That's a little lower than the 59-cent estimate, and they see Q2 sales down 2 to 4% year over year. But and the stock sunk. That's what I was going to say.
And Cisco, obviously, here not doing well in the pre-market either, down 4.5%, down $1.50. Joel, find us some levels.
I'll give you a level here, 29.85. That's your pre-market low. Only a few days ago, you had a low at 29.63. Called 29.75 support here. I mean, big move. The stock traded over 31.80 yesterday. $2 move down to this area. I think you just see, some short-term buyers here under $30 coming back on the upside. Since you made that low, your highest print has been at 30.55. And I looked at some of the options afterwards, and I think the 31 puts, with this thing closing at 31.57, I think we're like 40 cents. So you'd be up some money here. You'd be in a doubler, but just amazing the way they price that in. But that's your look in Cisco pre-market low 29.85.
It is so difficult to make money buying options off of earnings because the premiums are all jacked there. You're just basically buying the earnings event. And you're right, Joel. They're really good at pricing it. They figured out. It's amazing how many times. I don't know. It's like a chicken or an egg thing, too. Because when everybody's on a strike price, we know that can act as resistance because everybody has the calls or the puts at that price. So, in any regard here, and those option sellers make a lot more money than those option buyers over the long haul. Earnings, Walmart, WMT. So if you were taking a lead from Target, you were wrong here because Walmart's going in the opposite direction of Target yesterday. Target had good earnings and had a big pop yesterday. Walmart was up in sympathy with the Target earnings yesterday, but then started giving it back, and those investors that were selling it off were guessing right. Walmart's now down 2.5% here in the pre-market. Spencer, give us the number.
Well, it's mixed. Q3 EPS 98 cents versus 96, so that's not bad. Revenue 117.2 versus 118.7 billion, so that's a little bit of a miss. They see their fiscal year EPS at $4.20 to $4.35. The estimate was $4.34, so on the low end there.
And stock trading down through the critical psychological $70 support level. What's that got you thinking here, Joel?
69 even. Pre-market low. Then you go to the
It's a good
day.
number.
Yeah, you got a bunch of lows in that
Yeah.
areas too. Look at that. 69 all over the place. Once again, much better area to cover short perhaps and try a long. 69.14 through 69.35. That was 1, 2, 3, 4, 5, 6 lows in a row. So definitely an area of good support here in Walmart.
And these levels work here too, Joel. I was going to say, look at Lowe's, LOW yesterday. Disappointing report. Where does it go? Right, almost exactly to those old couple of lows that I had there. 64.87 was the low just from 4 days ago, and then if you go back to November the 1st, 65.18, the low yesterday, 65.12, right in the middle of those two. So, and then it bounced right off that level. So sometimes these earnings reports, they go to a level where everybody has seen before, and often buyers come back in at those levels. And if you have 4 or 5 lows there in the low 69s, that's what I think is relevant here for Walmart as well.
Lowe's was the perfect whoops trade yesterday, where if you were buying at the open, you were like
Dead.
Yeah, you were dead meat.
It
But
sucked.
yeah, and then you had to open. You went straight down a stick.
Yeah.
But if you came back up through that open, and we talk about this too, a familiar strategy. If you came back buying 66.23, that was an opening print. You came buying that back on the upswing. I mean, you probably didn't get it down to 66.23 on a stop, but there, man, caught all the people that were short from the open. And then on the rally there, and I know these things happen really quickly, and it's hard to catch it, but look at the close on Tuesday, 69.05. That wicked rally got into Tuesday's range, but look at it, came up 20 cents short of the close, which was also a whole number. So, man, these things are quick. It's easy to look at it after the fact, but your closing prices, your opening for the day and your closing prices are great levels to key on.
One of the first things you taught me back in May of 1999 when I started my prop trading career. Joel taught me about those opens and closes, and they do have a lot of relevance. Why? Because there are so many people that are participating in that print. We always say price has memory. That's why the open and the close has a lot of relevance, because people are positioned from that pricing, and that's a lot of times where maybe somebody's going to break even if they were wrong, and that's where you run into resistance, and you see a lot of turns, and then you start cutting back through there, and now people who are long it are now all of a sudden losing money and scrambling. So that is why, the reasons why the open and the close has a lot of relevance.
All right, so we got Cisco, we got Walmart, we got Lowe's. What else do we have?
Let's go and look at Best Buy, BBY, one that me and Joel have had wrong forever. We keep thinking Amazon, the stores seem quiet. Amazon, I would think, would eventually continue to eat their lunch, but just not the case, because Best Buy stock continues to outperform here. It's up 7% more here. They're having a good quarter here again. Spencer, what were the numbers?
Q3 EPS 62 cents versus 47 cents. Revenue 8.95 billion versus 8.85 billion. They see their Q4 EPS at $1.62 to $1.67. Estimate was all the way down in $1.58. So good numbers all around. And I will add, Joel and Dennis, that Anthony was at Best Buy over the weekend. I don't know why, but he was in the drone section and said they had sold out their drones.
Oh, I gotta go buy GoPro.
Wow. They're buying them at Best Buy, apparently.
You know what? I'm like one of those people that just go to Best Buy. Like, I decide I need it, and I just go there.
Because we're old.
And I don't, I could save $8.23 and going on Amazon or something, but I just go in there. They're really nice to me, and, I mean, not that I'm buying this kind of stuff that often, but...
Look, sometimes it gives you an excuse to just get out of the house, right?
Right? I don't I haven't been married that long. I don't need an excuse to get out of the house.
Okay.
I just storm out of the house.
Okay.
All right. 4405.
Or you get kicked out of the house.
Not yet. 4405. That's your pre-market high. We've bumped our head up against that a few times. So I'm not saying it's like going to be the top or anything, but I'll say if you've been sitting on this stock since November of 2013, you're even here at the 44.15, or that was if you bought the high of the day that day. So a little bit of resistance to me, but $1.15 away. I think sellers step in ahead of that. Dennis, we haven't had a lunch bet in a while. I'll say the high of the day is
No,
at best.
not even betting. I just can't trade this stock. It's got my number, and this is what I've said on the show before too. If there's a stock that you just continue to lose money in, stop trading that stock. And I'm done with trading Best Buy because it has my number. I can't call it right. I don't get why the stock, continues to outperform when Amazon is the one thing that just would probably, this is the one that would get attacked by it the most, I would think. So I've been wrong on this a long time. So I'm not even giving any opinion or anything on Best Buy here.
Okay, Dennis, I know you already had one rant and you're sweating a little bit, but I just want to make sure that no one in the chat room is caught holding dry ships.
There could be some people caught holding dry ships. Still not reopen here. I don't know if they've said when this is going to reopen. Chad, if you know anything, enlighten us. Obviously, it's a story we've somewhat been following, but I don't trade this kind of stuff, so I haven't been following it closely. I can just tell you that this stuff usually ends badly. And you look, dry ship's been halted for now 24 hours, so there's not much to say about that one. Obviously, it's still in a halt, and once we find out when it's going to reopen, it'll be interesting here. But I could tell you, just despite it being halted, all of these other ones just keep going straight up, and there's a dozen of them. And if you look at SINO, this one has went from $1 to over $8. Now it's 13 this morning. So, let's just continue, and it's up another 100% here this morning. So, the craziness continues here in this sector. DCIX, Ace was alerting us to this one here yesterday. Diana Container Ships, this one went all the way to $26 yesterday, then it crashed down to like $10. Now it's back up here at 17, all over the place. GLBS is another one. It's went from $2 or $3, got up yesterday to $23.60,
Oh,
back at 14. Nobody knows what any of these things are worth because you want to know something? A month ago, everybody thought they were all worthless. Everybody thought that these things were all going bankrupt and off the board. And now all of a sudden, these things are the best thing ever, even despite, a lot of these companies being in a lot of financial trouble. Nobody cares about this. It's all about the buzz. And obviously, once buzz starts with low floats, funny things happen and these crazy moves continue. And this SINO is a crazy one here this morning, up 100%.
Dennis, we've been ranting so much, we forgot about our 8:15 guest, and that's Ron Bienvenu, managing member of Spirit Point Capital Management LLC, to talk about some of his activist stakes. We'll be right back.
We're going to ask him about dry ships and how active he is in that one.
All right, we'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkan, along with Dennis Dick. We have Spencer Israel behind the glass, and we're interviewing Ron Bienvenu, managing member of Spirit Point Capital Management, LLC. Ron, how you doing on this Thursday morning?
Good morning, Joel. Dennis, I'm doing great. It's a lovely day down here in New Orleans, Louisiana.
Okay, all right. Well, we were just talking a little bit about the dry ships and everything that's going on here in the shipping sector, and we're thinking, where is the SEC when a stock like this is trading? Now it's halted. Who knows when it's going to open again? Just any comments on the craziness in dry ships?
Yeah, it's down here in New Orleans. I'm actually looking out on the Mississippi River, and so the shipping industry and dry ships is something we're close to here. We don't have a particular investment at this time in that area, so I don't really have a great comment beyond.
Okay.
We'll have to wait and see.
All right, well let's move on to some of your holdings here, and the first one, man, this thing has been extremely volatile here, and I believe it's a little bank right down there, FNBC. Talk to us about this crazy trading action and what you're interpreting from it.
Yeah, it has been a wild ride, Joel. The backstory on this is the company was very aggressive in growing using some fairly innovative accounting methods for tax credits, and built a pretty highly specialized business around that. The problem is under Basel III, those accounting methods will probably no longer be sufficient to rate as capital on their balance sheet. So they've got a fundamental problem, and they've been struggling to fix it. We're very close to it because it happens to be one of the local publicly traded companies here, so we kind of know all the players. Look, the bottom line here is our friends at Clinton Group recently put out a letter on this thing saying you should sell this and do that. There's some rearranging of the furniture on the Titanic that can be done on this one. But from where I sit, and I wish him the best, but from where I sit, it looks like you're going to have to restructure this business through the FDIC. So our bet is the equity is probably worth a zero. Could be wrong. If they can fix it, that would be great. But they need about $300 million of capital to be invested. And the problem is, if you were willing to write a $300 million check, you could probably get a big chunk of this business. But that $300 million has to just sit on the balance sheet as a reserve. So it's not really working capital. It's not really helping the business. Yet on top of that, the bank was exposed to a lot of South Louisiana real estate when they had the big flood. That's causing a lot of problems for them. So it is a mess. Sometimes if you get too aggressive, especially in the banking world, if you get too aggressive on your accounting, it comes back to bite you in the ass.
Maybe Trump's going to throw up Basel III along with Dodd-Frank. That would help him.
That would help him tremendously.
Maybe that's why rallies.
It's a brave new world we live in. Yeah. If you're willing to place that bet, that is probably a solid 10-to-1 return. If you can, maybe it's 10, but 5-to-1 if you want to bet on that.
A couple other stocks that you were looking at here. GSE Systems, which is GVP. What are your thoughts on this one?
Well, it's my darling, to be honest. We've been in it a long time. We were instrumental in helping restructure the board and management, about 2 years ago. We're very close to these guys. We think you have the best small cap management team possibly in the country. You've got a very aggressive group that come out of some great companies, and they reposition the business. It's in the nuclear space primarily, and they manage nuclear power plants, which was a business that was completely out of favor after Fukushima. But since that time, has gotten somewhat of a rebirth. And in conjunction with, the management team, we brought in this guy named Kyle Loudermilk out of Aspen Tech. And, he just refocused the business on what they do well. And what they do well is they build and support simulators for nuclear power plants, also for hydrocarbon plants, but mostly nuclear. And so what that means is every day you go to work, you got to test these nuclear plants, the safety and all the regulatory stuff. So they build a full simulator, and then they maintain that. So the good news is once a plant is built, you got a recurring customer for life. And that's been their bread and butter. They kind of got away from that over the years as they fiddled with other things and chased the latest and greatest. But they're back to their knitting. They have the biggest backlog in their history. They signed a $75 million deal earlier this year. That's on a company that's doing $45 million in trailing 12 months. So you got tremendous backlog. They're got new products rolling out, a new team. And I'll tell you the last thing I love about these guys. We're activists, so we harp on corporate governance, good corporate governance. These guys have been the poster child for good corporate governance. When we went in there and said, CEO, Mr. Chairman, we think you guys need to go. They said, you know what, we'll go. So they brought in the right people. So I'm just telling you, it wouldn't shock me if this stock doubles in the next year or two, just on the strength of what they got going. On top of that, you've got, like I said, the management team is my favorite one of all. and they're focused on some acquisitions. They announced in the last quarter that they were looking at over 100 companies, which sounds kind of silly, but if you're in the acquisition world, you need to look at 100 companies to find 10 good ones, of which 3 you might be able to do. And I would be surprised if you don't see some announcements that are transformative for this business in the coming months.
All right, we got a few minutes left here. Let's rip through a few more. You got one that's not going your way so well, and that's imitationcorporation.com. What's going on here?
Yeah, it's actually iMation, Joel, and it's a mess, to put it mildly. The bad news is it's a mess. What's going on there is I think the market's confused. Right now, you've got $50 million of cash. You got no debt. You got $25 million market cap, 24, I don't even know. And you've got a business in there called Nexan, which is a data storage business. It's a great business, been around for a long time. They paid $120 million in cash for that 4 years ago. They've invested over $80 million in new products, 2 of which rolled out this last quarter, and are jazzing sales. But here's the problem with that one, Joel. They've made the announcement that they have one asset that's really valuable, and a lot of people don't understand this asset. It's a $900 million net operating loss carry forward that can be used to shield income taxes. And so what the company has decided to do is jettison all its operating businesses and focus on becoming a registered investment advisor. So think publicly traded hedge fund with a tax-free shield. And they've been moving towards that. I think they are preparing to announce a series of things that I think should really stimulate stock. I also think they've announced that they're looking at strategic alternatives for Nexan. I think you'll see something on that in the coming weeks as well. And I think those 2 announcements on a net asset value, this company's grossly undervalued. It's just a confusing story. I think as the confusion abates in the coming weeks, I think you can see some real activity in this stock. It's a high risk because the story's not clear, but the downside risk is you got more than 2 times cash on your balance sheet with no debt.
All right, let's cover one more issue here. A competitor of ours, Jim Cramer and TheStreet.com. How's the activist role going over there with TheStreet.com?
Damn, Joel, I wish all my competitors were on the street. I'd be doing a lot better than that. So they are struggling. Another very frustrating story for us. Basically, what's going on there is same situation. You got a nice cash position. You got a business that should be doing really well. It's struggling. Their subscription business is declining. That's primarily tied to Jim Cramer. Their B2B business is extremely valuable, worth more than the total value of the company right now alone. It's about half the revenue. And, we've encouraged them to break up the company, to focus on one market and do it right. They brought in new management, all out of Gannett Corporation. So you got Larry Kramer and not to be confused with Jim Cramer, and Dave Calloway as CEO. They're journalists, and which we appreciate. Good stories, good content, like what you guys produce matters. But it also matters how you produce it, and we just don't think they've nailed the digital era very well. So we continue to push for change there. They continue to tell us to go pound sand, but we're not always the smartest guys in the room, but we are probably the most relentless. So we're not letting up. We're going to keep pushing them for change, and we'll see what happens over the coming quarters.
All right, Bobby Bid wants to know where you get your bow ties.
Nola Couture. They're the best. They are the best.
Right.
So it's right there in Jackson Square in the French Quarter, and it's these one-off kind of things. But thank you. Yeah, I love them.
Ron Bienvenu, managing member of Spirit Point Capital Management, LLC, discussing his activist role in a few different issues. Thanks, Ron. We'll talk to you again soon.
Thank you, gentlemen. Have a good day. Bye-bye.
Thanks, Ron.
All right, 829 S&P futures kind of quiet here, up a buck at 21.73.75.
Yeah, very quiet here, but I am seeing sectors that stand out. Oil is a little bit stronger here this morning, so I am seeing some strength in the oil sector there. Financials been bouncing around. They were weak. They're starting to come back here a little bit. So it's kind of a very mixed day here. We're just getting the imbalance data here right now too. That just came off at 8:30 here. So I'm looking at Bank of America 400,000 to sell, Morgan Stanley 149,000 to sell, Citigroup 112,000 to sell. So that selling pressure that we saw yesterday at the open of the financials is continuing. That is starting to become a trend here. It does look like there's some institutions that like selling these things at these highs here at the open. Also looking here, Twitter. 109,000 to sell here. Twitter had a rough day yesterday. It had been outperforming the market, but yesterday was an ugly candle there. This chart looks a little bit more concerning to me here now. Joe, what are your thoughts here on Twitter?
Just had trouble over 19. Was trying to fill the gap there. Just, what's the driver? The merger talk is taken off, is really subsided. Had a nice rally coming off those lows of 16. Couldn't quite fill the gap. I'm going to see if it, migrates back major toward that $18 support level, but just no driver.
American Express here, 103,000 to sell. That's another stock that has benefited from the Trump. It's been straight up, but a little bit of a red candle there yesterday. First concerning look here. Some of these financials look tired here, and I'm not saying they're going to pull back because they've been due to pull back probably for the last 2 or 3 days, but they really haven't. So, but they start to look a little bit tired. Is this just a pause here for a continued up momentum here, you think, Joel, or do you think something's actually happening where these things could start to turn?
I mean, you know what I think, but
you're the fader, though.
Yeah, I'm the fader.
But I think it could be a pause to continue going high. It hasn't been determined yet. And I think I'm going to go with the flow. And what I want to see, let's just look at a chart like Goldman Sachs, for instance. It was a quiet little candle there yesterday, $211 if we go back just to Tuesday's trade. And then yesterday, just a quiet little day, it made a new low on the move, 204.83. I would say if it takes out that low of 204.83, that's where you start to get concerned. As long as it holds that, I think that's my bogey. So I'm looking like 204.5. So it's trading below that, I'm going to start to get concerned. But the financials are a little bit resilient here. Even despite those sell imbalances I just talked about, you're actually seeing some buyers coming into this market right now for them.
All right, I'm just looking at the AXP, and I got a formation you like if you're trying to pick a top in here. 3 highs between 72.40 and 72.68. So there's your bogey if you're trying to short it here in the 71 handle. You got to be careful if it breaks out above there. Goldman Sachs, same kind of formation. I mean, the Bank of America, I can't get this stock out of my head. A triple gap. But just,
it just keeps going.
It well,
it just went up 10 cents since we started talking about it.
Yeah,
they're coming back into these financials right now. Esteban saying there's call buyers in BAC all the way up to $24. Who's buying calls at $24? What are those going for, Esteban? What are those 24 calls going for? Because that is a gamble. I mean, that is another 20% higher than here right now. I mean, we did just see it go from 16 to 20, but I don't think it's got the gas to go up to 24, does it?
I mean, come on. I didn't think it would go from 16 to 20. You think it would take take a little bit of a breather here. Same thing in Bank America. My bogey here is the double top that you have at 2016, 2018. So 2018 and 2020. High of the moves 2016. So there it is. I mean, that's what you have to do. I don't know why you just got that pop up to 1990 as the S&P.
These are flying right now, the banks, and now all of a sudden they come back down. Like, this is just this market. It just went to 1990, Bank of America. Now it's all the way back down here in 1977. They're all over the place right now. Something said, did we come out with an 830 number? Was there an 830 number, Spencer? Because these banks just all took off.
We had
they
CPI.
were all
we had jobless claims and we had CPI.
And was it a fairly strong number? That hot number that they think interest rates going up for sure?
No, I mean CPI for October was 2.1% versus a 1.6% estimate. So I mean that was pretty good, but that was year over year.
In any regard, these banks were all trading red on the day. The XLF was even in the red, and now the XLF is green. JP Morgan is now up 50 cents on the day. JP Morgan had a wild session. We should stop talking about that just for about 30 seconds before our next guest. But it was kind of wild last night, and I got whipsawed a little bit in that too. I mean, there's rumors that Trump was going to go and bring Jamie Dimon on board, and obviously if JP Morgan loses Jamie Dimon, terrible for the stock. That was the rumors that Maria Bartiromo was breaking just after the bell, and they started hitting JP Morgan. And then Fortune came out and said, no, Jamie Dimon's not leaving JP Morgan. And then the stock started popping here again. So I think, I can't see Jamie Dimon leaving JP Morgan. Can you, Joel?
To go into the Trump administration?
Yeah.
Boy, oh boy. I'd go 2 steak dinners that he doesn't do that.
I'd say so too. And I
Yeah.
think that's why JP Morgan is now trading quite a bit higher than some of the other ones, because there was a concern that yesterday, and JP Morgan was very weak yesterday, that might be the case. But I think, I don't think he's going to leave JP Morgan.
All right, S&P's falling the flat on today, even though we got a little pop in the futures here. So different things going in different directions. 8:35, we got a new guest to bring on here, Daniel Klein. He's a writer over at The Motley Fool, covers consumer goods, technology, and breaking news. We'll be right back with Dan Klein.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, with Dennis Dick and Spencer Israel, and we have Daniel Klein on the line. He's a writer at The Motley Fool. Daniel, how you doing on this Thursday morning?
I'm great. How are you?
Good, good. So how are you enjoying these markets post-election? You have a few different things to write about, huh?
Well, yeah, first of all, about 40% of articles mention Trump in some fashion, which is absolutely insane. But to go back to what you were just talking about, anybody who's trading based on a big-time executive leaving for a cabinet job, nobody is doing that. Nobody is leaving a multi-million-dollar a year job for a cabinet, for a president who could blow up at any time. I mean, I wish him the best of luck, but would you leave a CEO job to go work for someone who might not be the most stable person you've ever met?
I think you've wrapped it up pretty good there, Dan. All right, you like to write about consumer stocks here, and one that Dennis shorted, I think, at $5 and hasn't covered yet is Starbucks. And the stock had a good earnings last quarter. It kind of dipped, had a big sell-off here. Give us your quick take on Starbucks.
I think Starbucks is hitting some negative political headwinds. There's a certain crowd that doesn't like what Howard Schultz has to say. It's definitely an activist company, but in the long term, they don't really have a competitor. I mean, Starbucks really dominates the upscale cafe coffee market, and they're a clear step ahead of Dunkin' Donuts. They're a different play than Panera Bread. Long term, they're improving their technology. They have a huge amount of people in their app, and that's a big advantage. It's sort of like Amazon. You're not going to join 75 different loyalty programs. So if you already have a Starbucks app, you already have your credit card in it, people are going to go there, and the company can leverage that. So there's going to be short-term ups and downs. There's going to be investments that fail. Some of the things they've purchased, like the bakery, didn't work out so well. I think Teavana's a mixed bag. But the reality is Starbucks has pricing power. Starbucks has a loyal audience, and they have people who can spend using the app, which doesn't feel like money, which lets people spend more.
All right, let's move on to the housing sector here and the HARP loan program, and of course, that was the start of the financial crisis in 2008, 2009. Fannie Mae and Freddie Mac. We don't talk about these stocks very often, but just give us your assessment of the housing market and the effect the HAP loans are going to have on these companies. I know there's a couple big players. I don't know if it's Ackman or Dan Loeb or whatever that's long a lot of these things. Give us your take on Fannie Mae and Freddie Mac.
Well, I think we're seeing, mortgage rates start to inch up, but a lot of that is just speculative. And what a HARP loan does, in the article you're referring to that I wrote, a HARP loan lets someone who's a long-term owner, they paid all their bills, they make their mortgage payments on time, it lets them refinance. It's a sort of vote of faith from Fannie Mae, where basically you're saying, hey, the house isn't worth this much, but I'm going to let you refinance to make it less likely you default, more likely you keep living there. It should help stabilize. It has helped stabilize neighborhoods. In the short term, I don't see great things for the housing market because coming off historic lows for mortgages, you might get a short-term bump of people buying because they see the gravy train ending. But if mortgages go higher, it's going to be harder to sell and harder to buy.
All right. Have you tried the new Big Mac at McDonald's here? I guess they're experimenting with that in Ohio, trying some new products. I mean, does McDonald's really want to mess with the Big Mac recipe?
Well, the funny thing is, I don't want to be Herb, the guy who never had a Whopper, if you remember those commercials. But I've never actually had a Big Mac, but I still think this is a great move for McDonald's. McDonald's has never fiddled with the recipe of the Big Mac, and now they're offering, in Ohio, but I expect it to go national, they're offering a variation of it that uses a sriracha sauce. And this is the kind of thing that can bring in lapsed customers. On its own, it's not going to move the stock, but this type of innovation sort of puts the company front of mind, it brings people back, and it reminds them that they like it. And when you have something like a new take on a Big Mac, it sort of gives permission for people to eat something unhealthy. It's like Starbucks when they bring back a caramel brulee latte for the holiday. You sort of mentally give yourself permission to have a couple of them because, quote, it's limited time. And I think that's what's going to happen with the Sriracha Big Mac.
All right, we're talking Trump stocks, anti-Trump stocks here. This move in the financial sector. I mean, I facetiously say that rates are going to $5 here, and just this move in the financials. But just from your perspective, talk about that, some other Trump stocks, and maybe one or two anti-Trump stocks.
Not really my area of expertise, and it's something I think the jury is still out. I mean, there's a lot of panic. We all expected this to be another Brexit, and it was a Brexit that lasted 20 minutes. We didn't have even a few days of down market. We had an immediate rally. So I would worry a little bit about some of the companies that that Trump has targeted. I'd worry a little bit about Amazon. I'd worry a little bit about Starbucks. But overall, I think we don't know.
All right. Well, one other thing that is a little bit more in your wheelhouse is the healthcare sector. And boy, you got some nice moves here in Aetna and Anthem. He talks about repealing Obamacare, changing Obamacare. What's your take here? Great move in Aetna here. I mean, just from 105 to 125 here. What are the implications for a couple of these healthcare providers?
I think we're looking at a long-term, a 6 to 12-month positive for the healthcare companies. I think what you're seeing is, we're not going to see a wholesale repeal of, quote, Obamacare, the Affordable Care Act. What we're going to see is sensible changes, like allowing companies to sell across state lines. And, I just moved from Connecticut to Florida, and I looked at the exchange, and the exchange in Connecticut, my prices were much higher because at 43, I'm old in Connecticut. At 43, I'm young in Florida, so the prices on the exchange were much lower. So if you see cross-market competition, I think you're going to get all sorts of movement with these companies, and it's going to be a positive. A lot of them were looking to drop Obamacare, and now they're going to be in a situation where they can pick and choose which markets to go into.
Okay, we've been on the line with Daniel Klein. He's a writer for The Motley Fool, joining us here on Benzinga's Pre-Market Prep. Thanks a lot, Dan. Have a good day. We'll talk to you again soon.
I appreciate it. Thank you, guys.
All right, 8:45. S&Ps are just hanging out unchanged here, 2172.75. A little over 7-point range, mid-range on the day, 2175 here. Dennis, we're going to bring you back in here. And what do you think about
Yeah.
this quiet consolidation here? I mean, here we are consolidating right up here towards new all-time high or at all-time highs. I mean, are we just getting ready to bust through?
Yeah, I think so. I think this is going to be it's hard to fight this market. I mean, it's just every time it pulls back, there's just buyers buying with two hands there. And I think eventually we are going to break out here. I mean, there's been sectors that have been killed here, but there's always another sector that seems to pick up the slack. The money never seems to rotate right out of stocks altogether, just rotates into different sectors. There's no real fear out there anymore. So I think we are going higher here. I mean, is that, unfounded? I think there's lots of things to be fearful about. And I think eventually, this market might, come up with another crisis. But as of right now, everybody's loving this Trump market here, and a lot of people getting confident in the market again. We're seeing stuff even like dry ships, taking off, and that people are scared not to be in this market more than they're scared to be in it. And that's why I do think eventually we might break out here to new highs again. So
How about we're trading at 21.7250, and I
yeah,
know
oh, you want to propose a bet here?
yeah, and I know I just haven't been doing well on the steak dinner ones here, but
You're
this.
trying to get those steak dinners back.
How
from me.
about I'll give you 22.72 in the S&P, and I take 20.72.
No, because it's so much easier for it to go down. We got to be on that breakout thing. So, like we went down there a few times already. It dropped 100. We dropped 100 points right on the Trump,
He's
election
an
here.
artful
So,
dodger, man. I can't get nothing.
I'm not. I got to get that steak dinner for you before I end up betting it away here. So I'm going to come over here and collect sometime.
Well, you can.
Let's talk here.
You could bet one away and still have one here. But were you going to say talk airline stocks here, because that came in the chat?
Yeah,
Uh,
Blueberry wants to talk airline stocks. Funny, that my wife was just actually telling me United Airlines is now going to charge for overhead compartments.
No way.
Yeah, that's what she just got done telling me. I guess it's going around here today, man. And they act like, oh, it's we're debundling or everything here, and we can keep the airline ticket prices lower, just for you. Now they're trying to make money in other ways. It's just pulling the wool over your, and smoke and mirrors is what that is. They're just trying to make more money off you. So not only, now they charge you to check a bag. Years ago they never even charged you to check a bag. Now they're going to charge you for the overhead compartment space. These airlines is desperate for money. They got to charge me for putting my bag over my head.
Dennis, I just want to talk just real briefly. Blueberry might be referring to this. You got the Warren pop, right? And we were talking about it on the show that 2 days ago, and you did get a nice boost. But if you were buying into that in American Airlines or United Airlines, because I think those issues made a high just right off the open on that day, they're still holding those gains, and I think Love was another one. I mean, I think if you want to get in these things, I think you can get in at some lower prices. You can see Love gave some back here. I mean, I don't know. I mean, could you get a 50% retracement in these things? It was almost a $12 move, so you take 6. I mean, maybe catch this thing and near the $42 area. If not, I think it's still a little hard to chase.
Yeah, like Nick Shaheen says, and I said, I always get it wrong here, but it's too hot to chase, but too high, or too hot to short, but too high to chase, or something like that. So, did I say it right that time? I might have asked Nick how to say that, because I say it all the time on the show, and I say it wrong every single time. But these things have just moved up way too much, since July. Look back in July.
Yeah,
everybody was throwing these things out the window. I mean, Southwest Air was $35. Now it's 47. American Airlines, this one, if we just go to the weeklies and just look back into when everybody's thrown out in June, this thing got down to $25. Now it's $45, way back up at resistance. I mean, if you're coming in here and buying these things now, you're late to the party. So, short term here, who knows? Momentum's on their side. They could continue to go higher there. But longer term, it hasn't been the play to chase stocks when they've run up 80% in a matter of 4 months. I'm not a fan of chasing stocks. I'm a fan of buying them in consolidation patterns and then going with the move afterwards. So I'm not buying these stocks up here.
Yeah, it's hard. It definitely is. Also, I see popping in the chat. I'm not sure who it's from, but I thought I saw BIIB, the biotech. Let's first look at Biogen as an individual issue, and then we'll look at the IBB. Come on, BIBB.
BIIB.
Oh, what I doing? Oh, man.
Joel's dyslexia kicking
My
us
first,
again.
my first mistake in November.
We had Best Buy on the show too. I'm surprised you didn't type in Bed Bath and Beyond because usually you always get BBY and BBBY mixed up. There's too many B's for you. It's the B stocks, maybe, because here's Biogen too. Maybe you have a problem with B's.
Maybe, maybe, maybe
Did you get stung
Biogen.
by a lot of bees when you were a kid?
Biogen can merge with Best Buy and make it BIBBY.
And then you'd really be messed up.
What do you?
Anyways, talking Biogen, obviously the big gap and go a couple of times here since Trump. And, these stocks, I think it's consolidation here. And I'd say, as long as it can stay above that last gap, which is 309, I'm looking in the chart back to 6 days ago, stays above 309. I think the bulls are in control here still. There is, obviously it was rumors there back in July of, possible takeover by Biogen. I don't see that happening. But that being said, there is some value in these companies. I own Biogen, full disclosure, in my invest portfolio. Although I've sold most of my position here in Biogen, I'd love it to get back into the low 200s and I'd rebuy it all. But I don't think that's going to happen. 320, 317. As long as it stays about 309, though, I think I like it to the long side as opposed to the short side.
And this is looking, you look at the daily chart, it looks kind of overdone, but then you look at the monthly chart here, and 50% retracement from 480 to 230 and change. So what's that? 250-point move.
Wow.
125. That 50% might just take you up to the 350 area, and so we'll keep an eye on that. And then we also like to keep an eye on the IBB. 300. We've been buy it 250, sell it 300. Buy it.
It's worked how many times?
That's a monthly.
I mean, look at 2016. How many times did we bottom the 240s? 1, 2, 3, 4, like 4 times hard, and then just recently, obviously, when we got down to 246, and then 300. You're right. Every time it gets up to 300, that's been working. That back to channelingstocks.com. 240 to 300. Do it again and again, and then you retire like that kid did.
Okay, all right.
If anybody remembers that commercial.
Wait, what commercial are you referring to?
Oh, channelingstocks.com.
channelingstocks.com. Okay.
Yeah, buy low, sell high, the same stock again and again. Remember the kid that's like 25 and he's retiring.
And that was on the that used to be on the commercials for CNBC at the old Bright.
Yeah, that's why. Yeah.
Okay.
We watch commercials.
What do we need to do? We need. Is there any worthwhile ratings changes?
Yeah, there is. There's some couple big ones here today. So first one, Chipotle, CMG, getting downgraded to sell here at Guggenheim. They put a 315 price target on this puppy. So stocks trade down 5 points here in the pre-market on the negative commentary from Guggenheim. They think it could trade at 315 within a year. That's a long ways down from 397 here. What do you think? You think 315, or are you taking the other side of Guggenheim's bet?
When this thing came back up to like 380, 390, I'm thinking, this was the old breakout, breakdown area, and I was thinking, man,
yeah, I thought it too.
It just might fill the gap, so I laid off it. I think 420 is going to be the new 440 level in this. You hit it a couple days ago, and now you're coming down. So I think you have a step down seller. Originally wanted to get out at 420, then he pressed 415. Now he's pressing 410. Now that it's back under 400 here, you're taking out. Let's see, have we got to the trio of lows here? Pre-market low. Boom, 396, folks, but keep an eye on here. Your last 3 lows, we're just above that area. Call it 397.50. You could get, to me, that looks like support, even though we're trading below it, and then someone just lifted it at 398. So it may be going down to 390, 380, maybe 315, but it's going to have to cut through the buyers at 397.50.
And 385, that 387, 380, 390 level. So call it 385 to 390. It's so much support back in August, back in support in October. We finally took it out. Now we've cut back up through it. Maybe the first test back down here again, maybe it bounces there. So that's where I like it, 385 to 390, although I still hate it long term. I think it could bounce at 385 to 390 level. And then the other big ratings change this morning, Microsoft is getting upgraded to buy at Goldman Sachs here. MSFT trading up 80 cents in the pre-market. Goldman bullish on Microsoft.
Who gave us a bullish call on that? Was it a couple days ago, or was there some options activity? Can you remember? I know we had someone in the show. And
Goldfish memory here.
I'm scratching my head. I'm like, oh boy, this is a tough one. Ever since I was bullish at $27, I've been like a deer in headlights. 61.37, that's your all-time high. That's the recent high. I'm not buying this up 80 cents on the day, but see what happens. A buck away from all-time high here in Microsoft. Just kind of bunching up here. Let's see if we can find a daily high or something a little bit more relevant. Trading here, Microsoft back in the 60 handle. Yeah, keep an eye on 60-60, folks. Pre-market high is right there. That also is right in the middle of three highs that you had November 7th through the 9th.
Okay. Big day for Solar City here today. This afternoon, they are going to vote on the merger, the Tesla Solar City merger. So you're going to see major movement here on this vote. Obviously, if Solar City gets it and Tesla gets approved, it's trading at a little bit of a discount here still right now. So there's some money on that side. If it gets rejected, I think Solar City is going to be in a world of pain. So all I can say is I highly doubt that Solar City is trading at $19.80 tomorrow.
All right. All right. Big vote. Tesla here. They had a decent earnings. Look at this 180. It's clinging to this one.
It's been leaking.
Yeah. Yeah. What do you think about Tesla
I don't
here?
know. It's been a hard short all the way, and eventually you get these snapback rallies. If they vote to not put the merger through, I think Tesla pops.
Okay.
So I think it's all going to move on this vote too. So not only Solar City is going to move, Tesla's going to move too. If they push the merger through, I think Tesla drops. If the vote rejects the merger with Solar City, I think Tesla pops.
All right. You know what stock we haven't talked about in a super long time? Apple. Did you see? I mean, it single-handedly saved.
I said it yesterday. I talked about it yesterday because I said I liked it. I said if you put any stock down here at 106. Looking at Apple, I said there's good value down here. I said I'd love it to get back down to $100 because I'd load the boat, but it popped $2.50 yesterday. I like Apple still owning my investment account, still want to buy more on a pullback. I probably should have bought it yesterday at 106.
Did we have any specific news on this yesterday? Or, I see Ray Dalio at Bridgewater up this stake, but really nothing.
I had bullish comments in the pre-market prep show.
Oh, that's what I saw. You know what? I saw that on all the other news wires that Dennis was bullish. Okay, Dennis, we only have like 2 minutes here. Do we have any other issues that we'd like?
There's
to
a lot of earnings. Obviously, we didn't get to cover them all, but NetApp reported, Al Brands reported, we had SJM report, we had solar company JASO. But just quickly here, I want to talk about First Solar because First Solar did come out with some guidance here after the bell. Didn't have a chance to cover it here yet. Stock is trading down 11% here in the pre-market. Spencer, do you got the details here on what First Solar said to knock the stock down 11%?
Yeah, they updated their fiscal year 16 adjusted EPS to $4.60 to $4.80. The estimate was down to $4.42. So shares were actually halted ahead of that, down obviously after that. They're also cutting jobs, I think I saw. And just 1,600 jobs, about 27% of the total global workforce.
You want to talk about anti-Trump stocks. What can be more anti-Trump than the solar companies? Because he is all about, money, capitalism. Subsidies for solar companies, I'd be very scared about that under Trump. So that's why on the solar companies, I'm completely hands off here. And obviously when Trump gets in here, I think he's going to cut some of these subsidies back big time.
All right, 858. Spencer's going to preview our final show of the week.
Yep, on tomorrow's show, we got two guests for you. We got Mike Bailey. Haven't had Mike on the show in quite a while, actually. He's a biotech guy. He's director of research at FBB Capital Partners. And we're also going to chat with Adam Button. He is the director of Forex Live and a currency analyst. So looking forward to both those guests on tomorrow. If you missed any part of today's show, you catch the whole thing again on YouTube, iTunes, SoundCloud, or Stitcher. Just search for PreMarket or go to the YouTube or the Benzinga YouTube page. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Also, don't forget to check out Benzinga Pro, which is Benzinga's real-time news platform. That's great for anybody who wants to stay on top of what's going on in the markets. You can get Benzinga Pro for free for 2 weeks. Just go to pro.benzinga.com. You can also call us up at 313-723-2000. If you do that and you say you listen to the show, there is a discount involved on a subscription to Benzinga Pro. So don't forget to check all that out there. I think that's it for us today, so we're going to let you go. Hope everybody has had a good morning so far. Hope you have a good rest of your day, and I hope you join us again tomorrow for Mike Bailey and Adam Button. Have a good day, everybody.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.